What's up, guys? It's Migs with Market Open, back at you with another Monday mentorship session. Today's topic we're going to be covering is going to be momentum trading. I asked some of you guys in the Facebook room one of the topics that you guys wanted covered, and this was one of them. So let's go ahead and dive right into it. So what is momentum trading? So momentum trading is a term mostly for day traders who use a strategy based trying to predict the trends in the market. So there are two types of momentum trading. So there's an event-based one, which they're more referring to like news, earnings, some sort of catalyst, or they're talking about another momentum type is a technical-based momentum trader, which you're trying to make a decision based on what you think the market is doing and what the stock should do during the day. So momentum signals include such things as 52-week highs or 52-week lows. They're used by a lot of financial analysts. So the first one that I included in this little segment, so it was a stock that was actually in play today, was Micron, which the ticker is MU. MU got a upgrade from an analyst, and it also actually just had earnings. I believe it was one of these days, but that would be considered a catalyst. So earnings is a catalyst play. And then with the upgrade on Micron today, it went all the way from 56 all the way up to 61. So that would be event-based as well. Now, technicals based. ZSAN was also something that was in play today. It recently gapped up all the way from $4 all the way up to like $25.80 or so. And typically on something that moves this much with a low float, you would expect it to actually pull back and have a red day. So after it gapped up all the way from 10 and it ran all the way up to 25, you'd expect to at least have one good pullback. So this is something that's called first red day, made popular by some of the other gurus out there, that essentially kind of makes it's like a self-fulfilling prophecy, really. I mean, if you think about it, if you're in down here near $3, $4, $5, $6 and the stock runs up all the way up to $24, you're going to want to take some sort of profit. So you expect some sort of pullback within the next day or two. So although there is not a catalyst behind something like this, you expect people to start selling off some of their shares to be able to put that money into their pocket. I mean, obviously that would be the smart thing to do. Now, so this is more technicals based. There's no catalyst on it. There hasn't been for almost a week now, but you expect people to just kind of sell off for a while. So now, what are you looking for? So what you're looking for is very simple. You're looking for a pattern, and within the pattern, you need to have an entry, a stop, and a target. So what I did over here is here's the entry on MU for this morning. This is called a bull flag. So you're green right off the bat, so it goes up with the rest of the market. It pulls back to the 9 or VWAP, and then the very next candle to make a new high would be this candle, which is your entry. So how you would enter is at the top of this candle right here. Let's just say that it's 57.40, right? I believe that's what the entry was. And the stop was down here at 57.20. So what you're doing is you're risking 20 cents, and you're basically putting your money on the line saying, I think it's going to go higher than this based on the momentum because it is gapping up and people are buying it. I believe there were, let's see, this candle here had over 6 million shares that were being bought. So you can imagine if there were being 6 million shares being bought just within the first 5 minutes alone, obviously there's a lot of interest in this stock for it to go higher. So you just waited for the pullback, got in here at 57.20 or 57.40, put your stop here at the bottom of this candle, so at 57.20, you're risking 20 cents, and then now you have your entry and your stop. Now the next thing that you would need is your target. For you to have a good risk to reward ratio, you need to target higher than you're risking. And what I mean by that is that if you're putting $100 on the line per se, let's just say that you buy 500 shares, right? So you buy 500 shares here at 57.40 and you're risking 20 cents. So you need to at least hit 57.60 for you to cover your loss. But at this point, you're just at 1-to-1, but there's no reason for you to sell. So what you do is you start taking profits on the way up at certain points. So you can either start selling off some of the shares slowly, or you can just not sell until you hit a certain point. So if your target was up here at 58, you can start selling up here at 58. But by just having some sort of target already in the back of your mind, it kind of takes some of the pressure off whenever knowing when you need to sell, and you don't react on such a knee jerk, basically. So my target for something like this would probably be somewhere around 58. I would either take half or 3/4 of the position off, and then just ride the rest up until it breaks below the 9. So this actually didn't break below the 9 until it hit somewhere around 60. So you probably could have made you probably could have made as much money with that quarter piece that you had than with the initial 3/4. So you just kind of keep riding it up and selling it as you go to try to maximize your profits. But with that, if you already know the pattern and you have it memorized, all you need is the entry, stop, and a target. So essentially with momentum trading, what you're doing is you're buying high and selling higher. So it kind of seems counterintuitive because of what you've probably heard in the news and online and everything. Everybody wants to buy low, sell high. But if you're doing momentum, you're already buying the stock high, and all you're doing is looking for a pattern, and what you're doing is just selling it higher. So just because it gapped up all the way up to 57 and it's already high, that doesn't mean it can't go higher. So don't be fooled by something like that. Now, so these are some of the different patterns that I look for throughout the day. I'm not going to go into detail with some of the patterns that I specifically trade, but I will mention some of them. So you guys will actually hear me talk a lot about them during my trade recaps. So if you guys have not seen any of those, go into the trade recap watch list and watch some of those. But some of the ones that I trade is the opening range breakout, either on the 1 minute or 5 minute. I trade flags, either the 1 minute or 5 minute. Flat top breakouts, usually I'll do it on the 5. Cup and handle, usually I'll do that on the 5. Wedges, either the 1 minute or the 5 minute. And then VWAP bounces, I will actually do either on the 5 minute or the 15 minute. Depends really on the time of day. So these are some of the reasons why I trade momentum specifically. I tend to take the path of least resistance. So if something's a little bit easier in such a complicated financial world, because we're trying to deal with some of the smartest, richest people there are in the world, and let's be honest, all of us are not geniuses. So you have to try and make it easy on yourself and have the odds on your side to be able to pull some profits out of the market. So all you have to do is memorize some of the patterns. So patterns are easy to recognize, obviously. So if you know what something looks like, you'll be able to point it out over and over and over again. Also, there's a lot of volume to buy and sell into. So with the volume, what it does help is create the patterns. When people become greedy and when people are fearful, that will make out the patterns in candlesticks. A lot of people don't realize that's really what it represents. The individual movement of the buying and selling within each candlestick just represents what people are currently doing and if they're feeling greedy or if they're feeling fearful. So also with momentum, there is an overall trend, and the trend is your friend. Remember that. So if we're gapping up, I'm most likely going to go long. If we're gapping down, I'm most likely going to go short. So the only thing really left to do is just control the emotions, but unfortunately that is probably the hardest part about trading. So that is all I have for you guys today. If you guys do have any questions, make sure to put it down in the comment section below. Also, if you guys have not joined our Facebook group yet, make sure to do that. That'll also be in the description. And then you guys will also have some sort of input on the next topic that I covered on the Monday mentorship session. But until then, I'll talk to you guys next time. Bye.